A. Identify and discuss weaknesses in Sweet Treat's budgeting process and explain how the budgeting process can be improved. Present your solution in the following format. All right, so you can see you need to present your answer in a table format, and in the first column you need to identify and discuss the weaknesses in the budgeting process, and in the second column you need to explain how the budgeting process can be improved. Then you'll see there's 1 mark available for communication skills, and that is awarded for layout and structure. So the communication skill mark is awarded if you present your answer in the tabular format as per the required. Now there's quite a few parts to the required over here, so you need to make sure that you answer all parts of the required. First, you need to identify weaknesses in the budgeting process. And identification of the weaknesses is going to come directly from the information provided in the scenario, so from the question. And because the identification comes directly from the question, you'll see on the suggested solution, there's half a mark allocated for identifying weaknesses in the budgeting process. Then after that, and I recommend you always circle all of the ands in the required so that you make sure you answer all parts of the required. So after you've identified the weakness, you then need to discuss the weakness. And what that means is you need to explain why it is a weakness. Okay, why have you identified that as a weakness? And then because this is your own words and it doesn't come directly from the information provided in the scenario, you'll be allocated 1 mark for each of your discussion points. Then after that, you need to explain how the budgeting process can be improved. All right, and that's self-explanatory. Obviously, what must they do to improve the budgeting process? All right, so let's go back to the information provided in the scenario. Over here, you were given information relating to the budgeting process. Let's just read through this again as a recap. Budgets are prepared by senior management at the beginning of each year, and resources are allocated to divisions to ensure that profits for the year are maximized. Management deliberately sets targets that are difficult to achieve, and bonuses are paid to divisional managers if divisional operating profit margins exceed 40%. So the first weakness that you should have identified is that budgets are prepared by senior management. So that is the identification of the weakness, and you'll be awarded half a mark for identifying the weakness. After that, you need to discuss the weakness, or in other words, you need to explain why this is a weakness. So guys, if budgets are prepared by senior management and the divisional managers are not involved in that process of preparing budgets and determining targets, that can be very demotivating for the divisional managers. So how can the budgeting process be improved? Well, you need to make sure that the divisional managers are involved in the process. They participate in the budgeting process. Because if you involve them in the process, they'll be a lot more likely to accept the budgets and the targets that are set and be committed to actually achieving those targets. So what should actually happen is a bottom-up approach should be followed, and budgets should be prepared at the lowest level of management and then consolidated at higher levels. Then the next weakness that you should have identified is that budgets are prepared at the beginning of each year. You now need to explain why this is a weakness. So why have we identified this as a weakness? Businesses today operate in a very fast-changing environment. So the problem with setting budgets and targets at the beginning of each year is those budgets and targets can become very quickly outdated when things change. Another problem with this is once targets are achieved, performance is deemed satisfactory. What do I mean by this? Let's say, for example, the biscuit division has a target that they need to sell 200,000 units per annum. And let's say 10 months into the year, they sell 200,000 units. After that point, for the remaining 2 months of the year, there's no incentive for them to try and sell more units because they've already achieved the target. So if budgets are prepared at the beginning of each year, they fail to encourage continuous improvement. All right, let's now look at how the budgeting process can be improved. Instead of preparing budgets and setting targets at the beginning of each year, budgeting should be a continuous process. And where there are changes in the external environment that have an impact on the budget that was set and the targets that were set, those budgets and targets should be updated to reflect prevailing economic conditions. So, for example, if the biscuit division achieves their target of selling 200,000 units 10 months into the year, then that target should be updated and instead should be increased to 240,000 units, so that for the remaining 2 months, the divisional managers are still motivated or incentivized to try and improve performance. This will also ensure that variance analysis provides more meaningful information. Remember, guys, we calculate variances by comparing actual results to the targets or the budgets that were set. So if we are comparing those actual results to old and outdated budgets and targets that were set right at the beginning of the year, and a lot of things have changed since then the variances are not going to give you meaningful information. On the other hand, if you are comparing the actual results to updated budgets and updated targets, then the variances that you calculate will give you a lot more meaningful information. Then the next weakness that you should have identified is resources are allocated to divisions to ensure that profits for the year are maximized. So why is this a weakness? The problem with this, guys, is the budgets are focusing on short-term financial goals and they are not aligned to the strategic objectives of the company. How can the budgeting process be improved? Guys, if Sweet Treats wants to be sustainable in the long term, then they can't only focus on maximizing short-term profits, because some costs are necessary to be incurred so that the company can exist in the long term. So what am I talking about? I'm talking about things like innovation, developing new products, responding to competitors. All of these things cost money and they could have a negative impact on short-term profits, but they are necessary if the company wants to be sustainable in the long term. So instead of focusing on short-term profits, they should rather focus on long-term value creation. Budgets should also be aligned with the long-term strategic objectives of the company so that all divisions are working towards achieving the same long-term goals. Then the next weakness that you should have identified is management deliberately sets targets that are difficult to achieve. So why is this a weakness? Remember, guys, if targets are too difficult to achieve, it can be very demotivating. If the managers believe that the targets which are set are impossible to achieve, why even bother trying to achieve something which you know you're not going to be able to achieve? And we can actually link this to information that we've been provided with in the scenario, because we know that bonuses are paid if divisional operating profit margins exceed 40%. We also know, if we look at the biscuit division, that they had an operating profit margin of 30%. So based on this information provided over here, the manager of the biscuit division would not get a bonus this year because the target has not been achieved. However, we also know that during this year, there was a significant increase in sales volumes. And after this year, sales volumes are expected to return to normal levels in the future. So if they had a really good year, and in the future that's not expected to happen again, how are they ever going to achieve this target of 40%? It does seem impossible to achieve. So how can the budgeting process be improved? Remember, we don't want targets to be too easy either. You don't want them to be too difficult because then it's demotivating, but you also don't want them to be too easy because then the managers aren't incentivized to try and improve performance as much as possible. And then performance might just be mediocre for the year. So we don't want them to be too difficult. We don't want them to be too easy. The answer is we want them to be moderately difficult to achieve so that the divisional managers are motivated to maximize their performance. All right, then the last weakness that you should have identified is that bonuses are paid to divisional managers if divisional operating profit margins exceed 40%. So pretty much everything that you were given in this introductory paragraph is a weakness relating to their budgeting process. All right, so let's explain why this would be a weakness. How did management come up with this target of operating profit margins must exceed 40%? This seems to be an arbitrary measure. It's not based on anything. It's not based on what other companies are achieving. It's not based on benchmarking to best industry practice, etc. This looks like it's just an internal arbitrary measure that they've come up with. So how can the budgeting process be improved? When targets are set, they should be based on external benchmarks. So things like external best practices and industry best standards, not just on some arbitrary internal measure. All right, guys, so that then answers part A of the required.